Good morning. The markets are moving and so are you. From the BizNews studios, here is BizNews Daybreak for Friday, the 12th of December, 2025. I'm Alec Hogg, and here's the context you need to win the day. Last night, Wall Street delivered a split decision in a classic tug-of-war between rate cut optimism and AI anxiety. You'll recall that on Wednesday night, our time, that the US Federal Reserve cut interest rates by another 25 basis points. More on that late in the show today. But last night, the Dow and S&P 500 both stormed to fresh all-time highs. A reminder that US markets are in uncharted territory. The Dow was the star, surging over 1.3%. That's more than 600 points, driven by a massive rotation into blue chip and value stocks. Investors are still celebrating the Federal Reserve's rate cut from earlier this week, which lit a fire under sectors like financials and industrials. The tech-heavy NASDAQ, though, missed the party, sliding 0.3%. Villain here was Oracle, which tanked over 10%. Well, predictable. We did tell you yesterday morning that in after-hour trading, it was down double digits, and that after missing its revenue targets and signaling huge spending hikes. This reignited fears of an AI bubble, dragging down chip giants like NVIDIA. And the NVIDIA share price last night was under a bit of pressure. That was down by 1.5%. We also saw a big reverse for Google by 2.5%. Also on that, Tesla was down 1%. Palantir, our favorite stock, 0.5% lower, so only a little. And Amazon down by 0.5%. But there was a bit of a bounce by Uber, which had suffered badly the day before. That jumped 1.5% last night. And the solid stocks in the portfolio doing, solidly. Berkshire Hathaway and Teledyne both up 1%. Bitcoin fans will be delighted to see that the price is up nearly 3% overnight to just over $92,000. Well, the broader market is loving the cheaper money, but tech investors are facing a reality check on the cost of the AI boom. A feature was Eli Lilly and the whole obesity drug story. Here's Carol Mazar and friends from Bloomberg.
We have to talk about Eli Lilly. So the stock was higher by around 3%. Now it's pared back some of those gains, but still up by 1.5%. So investors are cheering a next generation obesity shot that helps patients lose as much as 23% of their body weight.
It's a lot.
I know. I was computing in my head and I was like, that is a lot.
It's a lot.
No matter how much you weigh, that is a lot.
Yeah.
And this could potentially make the experimental drug the most potent weight loss medicine yet. So patients on the highest dose of the drug lost nearly a quarter of the weight in 68 weeks, so that's more than a year. But still, and the study participants experienced a 62% reduction in knee pain. And I was talking to the author of this story, Madison Muller, and I was telling her that, when you think about weight loss, people usually associate it with superficiality or looks, but it actually really helps people who have medical problems, and it can help you with your lifestyle improvement and just overall make you healthier. And why is this a big deal? Because the obesity market is expected to hit around $100 billion by 2030, which is massive.
I mean, listen, we have just talked about how overweight the American population is, and diabetes, how many Americans are either pre-diabetic or diabetic. It's a large portion. I want to say like 40 or 50% of our population easily. And if you think about what this can do in terms of, for some people who are having a hard time losing weight, who are diabetic, this can be a game changer. And we kid with Madison all the time, like, is this the drug that's going to fix all that ails us? But it kind of gets down to that point that being overweight is, I know it's hard for some people in terms of weight management, but it is a much healthier thing to be, not be overweight.
Yes, the ticker is LLY, and the company's shot, the Zepbound, is already the most popular. But of course, Lilly is trying to develop and racing to develop drugs that are more effective, and the competition there is also intense.
I was looking at,
What are you looking at?
Around 38 million Americans have diabetes, roughly 1 in 10. So it's not maybe half.
Look up. Good job, Carol. But that's a lot of
silly little thing called Google. AI.
Not ChatGPT.
No, I didn't get there. But it says over 1.3 billion. This is a Bloomberg story. Actually, this is a couple of years ago. Over 1.3 billion globally will have diabetes by 2050. Wow. So that's a lot of folks.
Here at home, it was a good session for the JSE again yesterday. The all-share index climbed nearly 1% to close at 112,124. Quite interesting symmetry in those numbers. While the blue chip top 40 did even better. That was up by 1.1%. Local investors ignored the noise from Wall Street the day before and focused on a commodity comeback. The heavy lifting came from the resources sector, which jumped almost 2%. Gold miners were standout performers. Gold Fields and Anglo Gold Ashanti both rallied as bullion prices stabilized at a very high level. The real surprise, though, was Naspers and Prosus surging over 2.5%, completely bucking the trend of the US tech sell-off the day before. But of course, we are now seeing that things bounce all over the place. We do tend in South Africa to follow what happened in Wall Street last night. So I guess you could see a little more substance coming to the broader index on the JSE today after what happened yesterday. But interestingly enough, the Rand held its ground. It's now comfortably under 17 to the US dollar, trading right now at 16 rands and 87 cents. And this despite a strong dollar, dollar being firmer elsewhere. The reason for this is interpretation of the IMF optimism on South Africa. The IMF was particularly happy about the new inflation target. We've spoken a lot about that at BizNews. It was previously in a range from 3 to 6%. It's now been brought to a target of 3%, which would, the IMF believes, permanently anchor the risk premium on South African assets. This means that inflation expectations here are finally becoming anchored around a lower level, meaning that businesses will stop their practice of hiking prices by 6% automatically every year, which they could do because that was the top end of the target. Now it's 3%, different story. What does it mean for us? Well, markets love certainty. By validating the lower inflation target, the IMF is effectively telling global investors into South Africa two things. Your rands will lose less purchasing power over time. 3% is much better than 6% in inflation. And even if the South African Reserve Bank cuts interest rates, if inflation falls faster than rates, the real return, in other words, inflation-adjusted return for foreign investors holding South African bonds, remains very attractive. Not surprisingly, David Shapiro recently said that his top stock for 2026 was actually South African long bonds. Okay, well, on to the other news here in our country yesterday. Alan Gray has officially entered the actively managed ETF space. This is a unit trust giant in the country, and unit trusts generally pay better fees than ETFs. Not generally, they always do. So to see Alan Gray moving into actively managed ETFs is a big signal that there is another gunslinger in town, if you like. Today's move of those two new ETFs brought the total number of ETFs on the Johannesburg Stock Exchange to 126, with a market cap nearing 250 billion rand. I wonder how long it's going to be before we have someone here who focuses on just offering ETF, a portfolio of ETFs as an asset management company. Who knows? The FSCA, that's the Financial Services Conduct Authority, has imposed a massive 2 billion rand administration penalty on the online trading platform Bankso. We've been warning you about these characters for some time now. The regulator accuses Bankso of misappropriating client funds and misleading investors with unrealistic returns. Key directors have been debarred for up to 30 years, and the matter is being referred to the police. Now, I'll tell you something interesting here. After we started exposing Bankso, I got a very strong message from a very well-connected guy. I don't know how reputable, but a very well-connected guy who told me about certain other members there, and he said we were looking for trouble, we were going to get ourselves sued, and actually there were good people involved in Bankso. What we saw was that Bankso was linked to those fake ads which came from, which had been AI regenerated, telling you, showing Johan Rupert, keep calling him Anton, Johan Rupert and Nikki Oppenheimer and Elon Musk even telling you that if you put 4,000 Rand into this investment account, they've made 40,000 Rand or whatever it was. And of course, people were sucked in, and the investment account they went into was Banksa. And Banksa says, no, we had nothing to do with it. Yeah, right. Okay. Banksa has immediately pushed back on this, stating it has fundamental concerns with the ruling. Well, your directors have been debarred for 30 years. I'm not surprised you haven't. Labat Africa, my old pal, Brian van Rooyen, has now finally retired. He retired this week. He listed his company around the same time that I listed MoneyWeb. And Brian is well known to the public as the former president of the South African Rugby Football Union. He was the guy who took us into the championship, if you recall. I mean, that's how long it's been played for. Australia, New Zealand, and South Africa. Those were in Brian's days when something like that was highly innovative. Anyway, he took the firm onto the JSE in the late 90s and is credited with transforming Labat into a diversified investment group that it is today. The board says his legacy will remain central as they embark on a new repositioning strategy. Well, Mr. Price is really making people unhappy, down another 4% yesterday after a 13% hit on Wednesday's news. Why did the market hate it so much? Here's Piet Viljoen.
There are retailers in South Africa that have actually allocated capital well. Unfortunately, most have not, and the hit rate is extremely low. The hit rate of South African retailers going offshore and making a success of whatever acquisition like there. I mean, you can just run through them. Spar, you mentioned, famous brands, Woolworths in Australia, complete disaster. Truworths with its offshore activities. Steinhoff was a big acquirer of offshore retail assets. All of these failed miserably. And I was sitting here trying to think of one successful one. And maybe Pepkor was its Brazilian operation and its Polish, possibly Pepkor, but that's about it. I can't think of any others. So, I think the odds are heavily stacked against Mr. Price's management team in trying to create value out of this acquisition.
If you were sitting in their boardroom, what would the management have argued? What do you think they would have? How would they have argued, and how would you have responded if you were in that position?
I'm not sure what the argument could be. Maybe there's a good fit. Maybe they know the people. I'm not sure, because it's not only the acquisition itself, the fact that they're doing an offshore acquisition and the track record of South African retailers doing offshore acquisitions is so poor. There's two very other important aspects. Is not only South African retailers, most offshore retail acquisitions by a local fail. Most of them fail. So if a UK retailer does an acquisition into Europe or into the US, it generally tends to fail. Retail is not something that crosses borders very easily. So that's the one aspect. And that's why, one sees a lot of failure in this regard. And number two is the price they're paying. Now, I can't make out from the announcement and from the presentation whether what looks like a 40p or very close to 40p is based on the right earnings number. But at first glance, it looks very expensive. Now they've also got the price against them as well. So not only is the strategy, in my opinion, probably going to fail, most likely, but they're also paying far too much for it.
The share price dropped 13%. That is a very strong vote of no confidence. What do you do as a director of this company now?
Well, basically what the market has done, it has knocked 8 billion Rand off the market cap of Mr. Price, 8 to 10 billion Rand, which is basically the value of the acquisition they're making. So the market is saying this thing has zero chance of succeeding. I think Mr. Price needs to come out with a very strong statement of why they will succeed and how they will succeed, which they failed to do in their presentation today, and why they're paying such a high price, which they also failed to do in the presentation today. So I think they need to do one of two things, in my opinion. Either they need to walk away, listen to the market and walk away, or they need to communicate better. One of those two things. But I think it's extremely hard to take your set of skills that you've built up in this country and your network that you've built up in this country and move it across borders to another regulatory environment, another legal environment, another social environment, a whole different environment. I think that's extremely difficult. And I think the hit rate of South African companies being able to do that is very low. And I think that is information that needs to be taken on board by anybody who wants to do an offshore acquisition.
This is where the unthinkable happened. They just came here and took his car.
No. I sold it to them. What's this?
It's crime scene tape. Did they pay you at least?
Within 15 minutes, money was in my account.
Were you happy with the number they brought you?
I got almost the same price of what I paid for the car. Everything was easy, everything was painless.
Well, there you have it, South Africa. With We Buy Cars, you won't come short. I'll tell you really.
1.93.
We Buy Cars, the easiest way to sell your car by far.
And the other big story of the week, the negotiations between Eskom and the miners or smelters, Merafe Glencore and Samancor, had quite a few people very optimistic. Not sure, though, whether Peter Major shares that view.
We too often see government consultations being a joke, being a whitewash. Now, I don't think these are going to be a whitewash. You're dealing with hard vested players here who hold the key to thousands of jobs. So Glencore is not going to stand up for a whitewash or a mere consultation. They want to know that what they're saying is being dealt with. They want to see action. And in the other industries as well. And they don't want to see the average press release from government. We hear it, we're taking into account, we're going to put concrete measures. We don't want to hear you're going to put concrete measures. We want to see what they are. Here's the concrete measures we are taking, and have numbers and dates and people. And that's how businesses work for thousands of years. And that's how effective governments work, be it Singapore, be it China, be it Japan, South Korea. I think our government kind of knows what to do, but it goes against so much of what they've been doing. And because they have too many masters, the South African Communist Party, the unions, international relations, the ANC, internal, unfortunately, our people in government are catering to too many masters.
Still with Peter, I asked him to give us some insight into whether he felt the Bank for International Settlements was overdoing it by saying that gold is in a bubble.
Just look at where it's gone. This is the all-time high gold price to the money market index. Now, we know money markets are supposed to keep up with inflation and maybe give you 1% more. And that's so the majority of savings are in money market for the average person, especially for retirees. Now, gold has exceeded the high of the money market that it hit in 1980. And we know that was a bubble because gold had gone from $35 an ounce to $800 an ounce in about 6 years flat. Well, we've now exceeded that relative to the money market. We've only been this high relative to the oil price once in the history of man. Has gold been this high to the oil price? And funny enough, that was only about 12 years ago, and it didn't last. If the average oil and gold, the average price of oil to gold is 19 to 1, let's say 20 to 1. Well, we're now on 70. We're 3.5 times higher than that. And here's something even crazier. I never thought I'd see the day when a 1 ounce silver coin could buy a barrel of oil. So if anything's getting pricey, it's gold followed by silver right behind it. So yeah, it's left behind all of the other things that we normally benchmark it against.
Before we go, on Wednesday, the US Federal Reserve cut interest rates for the third time. Here's our partners at the Financial Times in the FT News briefing, giving us their take.
The Federal Reserve cut U.S. interest rates by 1/4 point inflation is still running above target and the job market is softening. Fed Chair Jay Powell said during his press conference that puts the central bank in a tricky position.
There is no risk-free path for policy as we navigate this tension. But with downside risks to employment having risen in recent months, the balance of risks has shifted.
The meeting also highlighted a growing division among members of the Federal Open Market Committee, and that's pretty unusual. Here to talk more about this is the FT's U.S. economics editor, Claire Jones. Hi, Claire.
Hello.
So why did the Fed decide to cut rates, and what was the argument against it?
The Fed opted to make the third interest rate cut in a row because they think the US labour market is no longer once as strong as it was. However, it was a highly contested move because we've still got a situation where inflation is running above the central bank's 2% goal, and there's a sense in which the inflationary impact of tariffs still hasn't fully fed through the US economy.
So there were 3 members of the FOMC who dissented on this decision. That's the first time we've seen that level of disagreement since 2019. What is it about this current moment that you think is leading to such a large division?
Powell has been an exceptional chair in terms of uniting the committee through some very tricky times. He was the head of the FOMC through the pandemic, and now we've got this era where the two sides of the Fed's mandate for both price stability and maximum employment are really quite in conflict. And in that situation, even someone like Powell, who's very, very well respected by other FOMC members, has been unable to stop dissent. One of those dissents came from Trump ally Stephen Myron, who voted again to back a bigger 50 basis point move. But possibly the more significant dissents came from regional Fed presidents. And what we saw there was that 2 members, Austin Goolsbee of the Chicago Fed and Jeff Schmidt of the Kansas City Fed, both wanted to keep interest rates on hold.
And now you have the edge. For the full interviews and the details behind these stories, head over to biznews.com. I'm Alec Hogg. Thank you for starting your morning with us. Now go and seize the day.